You're here because you want to get up to speed on the important stuff fast and really understand it, and that's what we do.
Exactly.
Today, we are diving deep into central bank digital currencies. CBDCs, you've probably heard the term bouncing around,
Oh, yeah.
and we're going to pull out the absolute key things you need to know to get a proper handle on what they are and why they're such a big deal.
Precisely. We've sifted through quite a bit of info, mainly leaning on the big Wikipedia overview on CBDCs to bring you the core essentials. Consider it your shortcut to understanding this new form of digital money from the source, the central banks.
Okay, let's jump right in then. What actually is a CBDC? I mean, it's not just like my online bank account, right?
No, that's a really critical difference. A CBDC is a digital version of a country's official currency, its legal tender, but it's issued directly by the central bank.
Yep.
So the money in your normal bank account, that's essentially a promise, an IOU, from your commercial bank. A CBDC, though, is a direct liability of the central bank itself. Some even talk about it as possibly representing an ownership stake.
Ah, I see.
Think of it like a digital banknote or coin, well, digital. It's a completely new form of legal tender.
Right, digital cash, but state issued.
Got it. And for most people listening, the kind we'd potentially use day to day, that's the main focus.
Exactly. You basically have two main types. There's retail CBDCs, which are designed for people like you and me, households, businesses, for everyday payments. And then there are wholesale CBDCs, which are more for financial institutions, settling large payments between banks.
Right.
But given you want to understand how this might impact you directly, yeah, we'll be focusing primarily on the retail side today. Our mission really is just to cut through the noise and make this whole evolving financial picture clearer for you. Perfect. So let's unpack the unique bits. We hear a lot about cryptocurrencies, Bitcoin, things like that. What's the absolute bedrock difference between those and a CBDC?
Okay, the fundamental difference, it really boils down to control. Who issues it, who manages it.
Right.
CBDCs are state-backed, issued and controlled by a central bank, so they're inherently centralized.
Okay.
Most cryptocurrencies, certainly the well-known ones like Bitcoin, are designed to be decentralized. No single entity is in charge. That's a massive difference, philosophically and practically.
So even though this whole digital currency idea kind of exploded with crypto, the tech behind most CBDCs might actually be pretty different.
That seems to be the case, yeah.
Sure.
While blockchain and distributed ledgers definitely sparked a lot of the initial interest,
Sure.
it looks like the majority of the retail CBDC models being proposed probably won't use blockchain. They're more likely to rely on more conventional centralized databases run by the central bank or maybe authorized private firms. So the concept, digital money, is shared, but the engine under the hood could be quite different.
Okay. Now, something else I've seen mentioned is programmability. Is that something CBDCs might have in common with some cryptos? And what does that actually mean for us?
Yes, programmability. That's a really fascinating and maybe slightly controversial aspect. It is a feature of some virtual currencies and cryptos, and it's definitely being explored for CBDCs. Essentially, it means the digital money itself could have rules embedded directly into it.
Rules? Like what?
Well, think about it. It could dictate how, when, or even where the money can be spent.
Yeah.
Imagine, say, government aid distributed during a crisis that can only be used for food or medicine.
Wow. Okay.
Or maybe smart contracts built into the currency that automatically release payments when certain conditions are met. It opens up some potentially powerful possibilities for efficiency and targeted policy.
What?
But, as we'll definitely get into later, it also raises some pretty serious questions about control and privacy.
Right. State-backed, probably centrally run, maybe programmable, that clarifies things. Now, this isn't just academic, is it? Are countries actually doing this?
Oh, absolutely, not just theoretical. There's huge global momentum. As of last year, 2023, something like over 120 jurisdictions were looking into CBDCs.
Over 120? Seriously?
Yeah, including all the big players, the European Central Bank, the UK, the US Fed. It's definitely on the agenda pretty much everywhere.
And have any actually launched one? Like, is it being used now?
Yes. Right now, there are 9 countries, plus the Eastern Caribbean Currency Union, that have officially launched their own CBDC.
Okay, who are we talking about?
Well, China was the first major economy with its digital renminbi, the ECNY. Then you've got Nigeria with the INERA. The Bahamas has the Sand Dollar. The ECCU has Dcash. Jamaica's got Jamdex. India launched a pilot for its digital rupee. And Russia's also launched a digital ruble.
That's quite a diverse list already. It shows it's not just one region. What about those big economies you mentioned? Europe, the UK, the US, where are they at?
They're making definite progress, though maybe more cautiously. The Eurozone finished a 2-year investigation and has now moved into a preparation phase for a potential digital euro.
Oh, it.
Brazil started piloting its digital currency, Drax, early last year. And the Bank of England has suggested a digital pound, if it happens, would likely be after 2025.
So things are moving, but maybe at different speeds. Is anyone hitting the brakes or seeing significant pushback?
Definitely. There's pushback, too. In the U.S., for instance, some states, I think Florida was one, have actually passed laws banning state agencies from using CBDCs, mainly citing privacy fears.
Interesting.
And in Switzerland, there was enough public concern about digital money potentially replacing physical cash that they might actually have a national vote on guaranteeing access to banknotes and coins. So yeah, it highlights that tension between potential benefits and concerns about government oversight and privacy.
Yeah, those examples really show the different values people are bringing to this. So, okay, if a country does go ahead, how might it actually work? How would I, use it? What are the models?
Well, the model getting a lot of attention, the one folks like the European Central Bank and the Fed seem to be leaning towards, is called the intermediated model.
Intermediated.
Yeah. So the central bank would issue the CBDC and run the core system, the sort of basic plumbing,
Yeah.
but the part you interact with, the wallet apps, the payment services, those would still be provided by your regular bank or other payment companies.
Ah, okay. So I'd still deal with my bank, but the money itself would be the central bank digital currency.
Exactly. It kind of leverages the existing financial system we already use. For you, the experience might not feel radically different from using a banking app today, but the key thing is the money itself would be a direct claim on the central bank, which is seen as safer.
That sounds like maybe a smoother way to introduce it. Are there other ideas floating around?
Oh, yeah. There are other possibilities. Some talk about a direct model where people could actually hold accounts directly with the central bank, sort of bypassing commercial banks for this specific type of money. And there are hybrid ideas, too, mixing elements. The choice really matters. It affects the role of banks, how much direct interaction the central bank has with everyone's money.
And that brings up the big one, traceability, right? Governments might like being able to track money flow, but people value privacy. How are they trying to square that circle?
Yeah. That's probably the central tension in the whole debate. There's this clear trade-off.
Right.
On one hand, more traceability could be a powerful tool against crime, money laundering, tax evasion, all that. On the other hand, there's the fundamental right to privacy.
So how do you balance that?
Technically, depends a lot on the design. Is it token-based, more like digital cash where holding the token is ownership, or account-based, where the central bank keeps a ledger of who owns what?
Okay.
And then there were questions about how much anonymity is built in, or what kind of privacy tech is used. Different countries are definitely exploring different approaches, trying to find a balance, but it's tricky.
Yeah, I can imagine. Okay, so we have a clear idea of what they are, who's looking at them, how they might work. Let's switch gears to the potential upsides. What are the main arguments for CBDCs?
Okay, benefits. There are quite a few potential ones. First up is probably technological efficiency.
Oh, so.
Well, CBDCs could mean truly real-time payments, 247. No more waiting for checks to clear or transfers to process over weekends.
Okay, that's appealing.
For businesses, that reduces risk. They get paid instantly. And for you, for everyone, it could mean much lower or maybe even zero transaction fees compared to, say, credit card networks.
Lower fees, always good. What else?
Then there's financial inclusion. A CBDC could be a way to provide a very basic, low-cost or free digital account and payment service to everyone legally resident. That could bring a lot of people who are currently unbanked or underbanked into the formal financial system.
That's a big societal goal.
Definitely. And linked to that transparency point we mentioned, there's a potential for preventing illicit activity.
Right, the tracking.
Because digital transactions, especially in a more centralized system, leave a clearer trail. It could become much harder to hide income for tax evasion or to launder money. Some also argue it could make reversing fraudulent transactions easier.
So potentially a hit to the shadow economy.
That's the idea. Plus, you get other benefits like automatic proof of transaction. No more arguments about whether you got the right change. There's a digital record.
Ah, true.
Also, as physical cash use declines, a CBDC could be crucial for protecting money as a public utility, ensuring everyone still has access to a safe, state-backed means of payment.
A modern alternative to cash.
Exactly. And it could enhance the safety of payment systems overall by providing a really robust, trusted national digital payment option, maybe spurring more competition too.
And for the government itself, any financial perks?
Yeah, a couple of things. One is preserving seniorage income. That's basically the profit governments make from issuing physical cash, the difference between the cost to make a coin or note and its face value.
Ah,
If cash disappears, that income goes away, unless there's a digital replacement like a CBDC. Also, the very existence of safe central bank digital accounts could push commercial banks towards more banking competition.
oh,
Well, if people have a super safe option with the central bank, commercial banks might have to offer better interest rates or services on their deposits to keep customers.
interesting. Could shake things up. Now, I've also heard CBDCs could give central banks new economic tools.
Yeah, this is where it gets kind of interesting, maybe a bit more radical. It relates to monetary policy transmission,
Meaning?
meaning how central bank policies actually affect the economy. CBDCs could offer a more direct channel. For instance, during a recession, a central bank could potentially distribute digital currency directly to citizens, that idea of helicopter money, to boost spending quickly.
Directly into people's digital wallets.
Potentially, yes.
Yeah.
We actually saw a trial of something like this in China with the digital yuan. They issued some with an expiration date.
An expiration date.
Yeah, to really encourage people to spend it quickly. It relates to this older idea called demurrage, which is like a small negative interest rate on holding money, pushing you to circulate it rather than hoard it. It's definitely an experimental concept for monetary policy.
Wow. Okay. That's quite different.
And finally, just on safety, for individuals worried about bank failures beyond deposit insurance limits, a CBDC could offer ultimate financial safety, holding funds directly as a claim on the central bank, avoiding fractional reserve banking risks.
Okay, that's a really broad range of potential plus points: efficiency, inclusion, crime fighting, policy tools. But there's always a but. What are the major criticisms, the risks people are worried about?
Absolutely, and the concerns are significant. A really big one is banking system disintermediation.
Disin, meaning cutting banks out.
Essentially, yeah. The worry is if people see CBDCs as much safer or more convenient, they might pull large amounts of money out of their regular commercial bank accounts and put it into CBDCs instead.
And that would be bad for banks.
It could weaken their balance sheets, reduce their ability to lend, and potentially, in a crisis, even increase the risk of bank runs on the commercial banks that are left. Now, central banks are aware of this. They're talking about ways to manage it, like maybe putting a limit on how much CBDC any one person can hold. But it's a major structural concern.
Okay. Destabilizing banks, that's big. What else?
Well, it links to the whole issue of centralization. Because it's state-controlled, people worry about giving that central authority, the government or central bank, too much power. Power over the currency itself, power over individual accounts.
Like freezing funds.
Exactly. The ability to potentially add, remove, freeze, or seize funds directly. And related to that is the risk of digital dollarization,
Meaning?
meaning a situation where a really well-designed, stable, foreign CBDC, say a digital dollar or euro, becomes so popular in another country that it starts to replace the local currency,
Yeah.
undermining the local central bank's control.
Like it happened with physical dollars in some places.
Precisely. And things like Facebook's original Libra proposal, even though it changed, definitely heightened those fears for central banks.
Okay. And the elephant in the room for many, I suspect, is privacy.
Privacy, yes. This is arguably the most widespread and deeply felt concern.
Why specifically?
Because, depending on the design, a CBDC system could potentially give the government a direct window into all of our financial transactions. Every coffee bought, every donation made, every bill paid.
Oh, that's concerning.
It raises huge red flags about mass surveillance, the potential for chilling effects, people changing their behavior because they know they're being watched, and undermining freedoms of expression, association, basically financial privacy.
Right.
The sheer amount of data is immense.
It really lays bare that tension, doesn't it? The potential for efficiency in fighting crime versus individual liberty.
It really does. And there are other risks, too. Cybersecurity is a massive one.
Makes sense.
A national CBDC system would be an incredibly attractive target for hackers, state-sponsored or criminal. A successful attack could be catastrophic.
Yeah. The whole system.
And finally, linked back to programmability and control, are the fears about government social manipulation.
How so?
Could that programmability feature be used not just for good, but as a tool for social engineering or control? Imagine fines for behavior the government doesn't like automatically deducted,
Mm.
or freezing the accounts of dissidents, blocking donations to certain NGOs, maybe even restricting purchases of things like, I don't know, sugary drinks or gasoline.
That idea of money that you can only spend on certain things or that expires.
Exactly. It raises fundamental questions about autonomy and the potential for misuse of that technological power.
Right. Those criticisms definitely paint a picture of potential downsides that really need careful thought. It's so clear that while there are compelling potential upsides, the risks are just as significant.
Precisely. It's a really complex balance, no easy answers.
Hmm.
And the specific design choices, the governance, the legal framework, all of that will be absolutely crucial in determining whether CBDCs end up being a net positive or negative.
So, wrapping up this deep dive, it's undeniable that CBDCs are a huge potential shift in how we think about and use money. They offer this promise of, better efficiency, maybe more inclusion, new ways to tackle financial crime.
Right.
But they also bring these massive questions about centralizing power, about surveillance, about our basic financial privacy, and even the potential for social control.
And it's vital to remember just how widespread this exploration is. As we said, well, over 100 countries looking into this in some way. This isn't some fringe idea anymore. It's a major potential transformation of the global financial system playing out right now.
This has been really illuminating and honestly quite sobering in places too. It definitely leaves me, and hopefully you listening, with a big question to chew on. Given this incredible power, the potential for both streamlining finance and enabling unprecedented oversight, what core values, what fundamental principles must guide how these CBDCs are designed and rolled out, if they are, to make sure they actually serve the public good and don't become tools for the wrong kind of control. It's a debate that's really just getting started and it affects everyone. Thanks for joining us for this deep dive.